As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mayank Vaswani from CDR India. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone, and thank you for joining us on this call to discuss the financial results of Apollo Hospitals for Q1FY22, which were announced yesterday. We have with us on this call today the senior management team comprising Mrs. Shobna Kamineni, Executive Vice Chairperson, Mrs. Sunita Reddy, Managing Director, Dr. Hari Prasad, President of the Hospitals Division, Mr. A. Krishnan, Group CFO, Mr. C. Chandrasekhar, CEO of AHLL, and Mr. Sanjeev Gupta, CFO of Apollo 24/7. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note the disclaimer mentioning these risks and uncertainties on slide 2 of the investor presentation that has been shared earlier. Documents relating to our financial performance have also been uploaded on the corporate website as well as the stock exchange websites. I would now like to turn the call over to Mrs. Sunita Reddy for her opening remarks. Thank you, and over to you, ma'am.
Thank you, Mayank. Good afternoon, everyone, and thank you for taking time out to join our call on a Saturday. I trust all of you have received the earnings documents that we shared last night. Q1 FY22 was characterized by the devastating second wave of COVID in India. The intensity this time around was totally overwhelming on the health system in terms of availability of beds as well as availability of critical life-saving equipment, especially oxygen. There was also a wide gap between the need for doctors, nurses, and support staff across health systems. At Apollo, with the experience gained from the first wave, we had perfected the method to achieve effective separation between COVID and non-COVID patients by standardizing protocols across our hospital network without disrupting the regular non-COVID care. Based on that, at the start of the second wave, in the month of April, we dedicated 2,300 beds for COVID treatment, which we subsequently increased to 5,000 beds at peak, including 1,200 ICU beds, then tapered it down by the end of June. We mobilized our medical staff, nurses, technicians, and doctors quickly and kept up the morale of our frontline workers during this period. The strict protocols and the training helped to keep the infection of our frontline workers at extremely low levels. Proper planning, execution, partnering, and close coordination with our vendors ensured that we were able to arrange for the supply and replenishment of all essential equipment, consumables, medicines, and oxygen at all our hospitals. We have treated close to 23,500 COVID inpatients this quarter. Our home care division handled 20,500 COVID isolations, while our our hotel isolation program handled 24,000 patient nights. Apollo 24/7 has completed over 6 lakh consults till the end of this quarter. In parallel, we also embarked on India's largest private vaccination program using the advantage of our pan-India network of 19 medicine supply hubs with cold chain facilities, 71 hospitals, 250 plus clinics, and 500 plus corporate healthcare centers, along with on-site vaccination. Cumulatively, we have completed 3.86 million vaccinations till date. On the non-COVID side, there was definitely an easing of demand on the outpatient and surgical side, given that people were struggling to deal with the second wave and regional lockdowns. Transport and movement were restricted, and therefore elective surgeries were postponed. However, better all-round preparedness resulted in us being able to serve both the COVID and the non-COVID patients effectively and report an accretive performance this quarter. In July, we have already witnessed a revival in patient footfalls across our network. Against this backdrop, let me walk you through the numbers. On a quarter-on-quarter basis as compared to Q4 FY21, the company recorded growth of 24% in standalone revenues to 2,995 crore. Pharmacy distribution reported revenue of 1,520 crore, a growth of 35%, while healthcare services revenue grew by 15% during the quarter. Our new hospitals recorded revenue growth of 43%, while mature hospitals revenue grew 5% quarter-on-quarter. Margins in mature hospitals were strong at 23.1%, and I am happy to state that our margins in new hospitals continued to witness improvement, moving up to 16.3% for the quarter, registering a 69 basis points improvement on a quarter-on-quarter basis. Q1 FY22 standalone occupancy at 3,282 beds or 66%. Standalone post India's 116 EBITDA was at 391 crores, quarter-on-quarter growth of 16%. Pharmacy distribution EBITDA was at 78 crores after absorbing marketing costs of 37 crores for Apollo 24/7. Without this change, pharmacy EBITDA was at 115 crores with an EBITDA margin of 7.6%. Standalone PAT was at 150 crores as compared to 116 crores in Q4 FY21. Net debt as of 30th June 2021 was at 1,665 crores with a debt equity ratio of 0.48%. Consolidated results. Our consolidated revenues grew by 31% quarter-on-quarter to 3,760 crores. Healthcare services revenue grew by 26% to 1,939 crores. Mature healthcare services grew by 20% to rupees 1,268 crores, while new hospital revenues grew by 40% to 627 crores. Group occupancy at 5,100 beds was at 67%. The consolidated post India's 116 EBITDA for Q1 FY22 was at 520 crores compared to 412 crores in the previous quarter. Within this, healthcare services EBITDA was at 394 crores compared to 325 crores in Q4 FY21. The results of Apollo Medics Lucknow and Apollo Multi-Speciality Hospital Kolkata have been consolidated in this quarter. AHLL recorded an EBITDA post India's of rupees 48 crores as compared to 31 crores in the previous quarter. Margins were at 15.5%. The business has recorded a 47% quarter-on-quarter growth in top line. Consolidated PAT is at 489 crores. This includes a gain from the fair value gain remeasurement on existing share of the Kolkata asset. Without this effect, attributable PAT was at 195 crores compared to 168 crores in Q4 FY21. Consolidated net debt is at 1,793 crores. We continue on our transformational journey towards creating India's largest omnichannel healthcare platform, Apollo 24/7, which has deepened and strengthened its presence in this quarter. 10 million unique users are registered on the platform. The platform has enabled neighborhood pharmacies to deliver over 16.5 lakh medicines from 17,000 PIN codes with order delivery within 2 hours of the order placed. The 6 lakh online consultations I mentioned earlier span 440 cities with 5,500 doctors across 60 specialties and delivering on the promise of consult an Apollo doctor within 15 minutes. During the ongoing pandemic, diagnostic home sample collections demand surged and we completed more than 70,000 COVID tests and delivered results within 24 hours. We have partnered with multiple corporates for doctor on-call services, vaccination drives, and stay safe services. Shareholder approval for the slump sale announced last quarter to Apollo Healthco has been sought by postal ballot and is expected to be completed by the end of the day today. To conclude, while the second wave of the pandemic did disrupt our overall performance and momentum over the last 18 months, the long-term growth strategy and trajectory of the company remain intact. While our agility and resilience in handling these unexpected crises have only strengthened us as a team, we continue to be positive about the opportunities and potential that lie ahead for a well-diversified healthcare delivery model. On that note, I would like to hand it over to our moderator and open the line for question and answers. I have with me Shobana, Dr. Hari Prasad, Krishnan, our CFO, Chandra from Apollo Health and Lifestyle, and Sanjeev from 24/7 to take your questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepak Malik from Bearing Capital. Please go ahead. The first question is from the line of Deepak Malik from Bearing Capital. Please go ahead. Deepak, your line is in the talk mode. Please go ahead. Mr. Deepak Malik, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is from the line of Damayanti Karai from HSBC Securities and Capital Markets. Please go ahead.
Hi, good afternoon. Am I audible?
Yes.
Okay. So, ma'am, my first question is on your Apollo 24/7 platform. Thank you for putting out details in the investor presentation. So, in the presentation, it's mentioned that we have right now 5,500 doctors registered with the platform. So, just to check, I remember last time you mentioned we had 7,000 doctors. Have we reduced this, or how do we stand there?
I'll take that question. We have what we're looking at is active doctors now. Where at the beginning, fast and furious. These are doctors that do at least 2 to 3 consults a week. So we still have an inactive base. All Apollo doctors automatically have registered on to 24/7 that they have the app with them. But these are the people who are actually doing consults. So I think we're trying to make that very transparent. And we have a lot of doctor partners also. So the actual list is very high.
So this 5,500 doctors, it's just the in-house doctors or in-house plus partner doctors?
These are a few partner doctors. There are about 200 plus partner doctors, but most of these are Apollo consultants and a few full-time doctors that we have.
Okay, ma'am. So with continuing on this platform, so ma'am, you mentioned you are looking to see 2 to 3 active consultations per week from the doctors who are currently there on the platform. So what is the current utilization of these doctors? I mean to say right now we are doing 2,000 consults per day. Yeah.
Yeah, so it's the current utilization, and what we're trying to do is, like, during the COVID time, we actually had more than 15,000 consults a day, and I think that this is something that we do think will start ramping up, especially with corporates. And I must say that these are all paid consultations. These are not free consultations like most other platforms offer. The average value per transaction on this is around between 600 to 700 rupees.
Okay, ma'am, that's very helpful. So all are paid doctors, and then 600 to 700 rupees the fee per consultation, which we are seeing right now.
These are consultants. These are Apollo consultants mostly. And so the fees that they charge are pretty much the same that they charge when people come to them for consultation, for physical consultation.
Okay, ma'am. And thank you for your response. My second question is on the operating cost. So 1Q number broadly reflect our normalized cost, or there are still scope to see incremental costs from here on? And like, what about margins? How do we see margins moving on from current level to say next 2 to 3 quarters?
You're speaking about 24/7, or you're speaking about generally?
The broader corporate level performance.
At corporate level, we do expect margins to improve. Healthcare services, obviously, in this quarter, with vaccines were at a 15% margin, that impacted our margin by at least 1%, 0.5%. We also had COVID incentives and that we paid to employees, etc., of almost 1% of our revenues. That also has is part of our healthcare services margins as you see it today. So as we move forward, we have guided that we would be looking at healthcare services mature to go to 23% and upwards, and the new hospitals should also go in the 15-16% range. Overall, that's the guidance that we would like to give. Proton has also started doing well, and you will see that overall the margins should start tending to improve with a combination of better case mix outside of COVID and cost control.
Sir, on the new hospitals, we are already at 16% margins, right? That's the underlying margin, or?
Yes, we should be able to get that margin. We should be able to retain that margin.
Okay, sir. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi. Good afternoon. Just checking. Am I audible properly?
Yes, sir. Please go ahead.
Yes, thank you. Sir, Krishnan, one question on the net debt increase. Can you just walk through that out of 650 crore increase in the consolidated books in quarter-on-quarter? How much was used to pay for the clinical stake? How much went to CapEx, etc.? Some clarity you can give us.
So, the debt, almost around 400-500 crores of the debt is towards working capital increase. It should come back in the next 1-2 quarters. 150 crores of vaccine was there because we had to pay vaccines in advance to all the to secure the because as Ms. Sunita said, we are the largest private sector vaccine providers, and we had to secure the vaccine doses in advance, which meant that we had vaccines and even Regeneron for the COVID care patients. Regeneron also was an important treatment that we were able to secure in this wave, and there is almost 160 crores of that in our inventories in as of June end. You would also have noticed that there has been a spurt in sales in the standalone pharmacy business or the overall pharmacy business from Q4 to Q1, which was almost 250 crores of spurt aided by COVID, stocking, etc. All of that meant that there was an inventory which was required to be kept in the front-end stores also, including the back-end. So that is another 340 crores. So almost around 500 crores has been blocked in our system for inventories and working capital. We expect that almost 400 crores should be getting released out of that over the next 3 months.
And just to add to that, 200 crores of this is against the government policy on giving working capital to giving short-term capital to hospitals at a cost of 4.5%.
Okay, so you guys took 200 crores there. Okay. So just clarity here. So the stake that we paid out for Green Eagles, that was already paid out in fourth quarter, or was it paid?
Yes, it's already paid. It's part of this. As you see the current net debt, so to make it explicit, the current net debt that you see in the system, we expect this to come off by another 400 crores over the next 3 to 4 months. This has already been paid. 410 crores for Apollo Gleneagles is already paid in full.
But what that 410 crores was paid in Q1 or 4Q?
In first quarter.
In first quarter. Okay, thank you. And just from the vaccination, I'm just trying to get a very rough idea. So vaccination at the EBITDA level would have contributed how much? Like, would the range be about 12-15 crores, or would it more than 20%?
15% is what was contributed.
15% is
that would be 15% of the overall 167 crores, which is 190 crores, which is there excluding Delhi. With Delhi, we were at 225 crores. Without Delhi, because Delhi is not part of our revenues, without Delhi, it is 190 crores, including Apollo Health and Lifestyle, which has around 55 crores in their revenues. And this was all at 15% margin. So 190 crores into 15%.
Understood. And the second set of question on the Apollo 24/7. I'm just trying to understand what's the monthly run rate we are doing on the revenue side across all services that we do from there. Would it be a number like, would we be doing more than 50 crore revenue there? Would we be doing roughly around sub 50 crore revenue? Can you just give some range there? And can we end this year with more than $100 million revenue there?
Shobna, would you want to give some guidance on this at a broad level, or is it?
Sorry, I didn't get the question.
So can you repeat the question for Ms. Shobna, please?
Yes, please. So I was asking on 24/7 across services, monthly run rate of revenue, what is the number right now? And can we end this year with more than $100 million revenues for 24/7?
Can we what? See more than?
End the year with more than $100 million of revenue.
No, I think that we are the fastest in the country, you will see, and our run rate, what we expect to finish the year with is closer to about $50 to $60 million. And this is actually the fastest rate for the first full year, if you compare to others. And yeah.
But yes, please go ahead.
No. These are starting days, so the trends are good. I think that we're focusing more on, the availability, the challenge of making sure that in 2 hours we deliver medicines, opening up more PIN codes, availability, and many of these areas are being looked at. As every day we keep improving our product. So consider this as early days, but the escalation is really, the ramp up has been at a super fast pace, especially during the COVID time. There were days that we got 45,000 orders a day.
And just some clarity on the online consults. Last quarter you mentioned cumulatively you have done 5 lakh consults. This quarter you mentioned 5.7 as a cumulative number. So only 70,000 consults happened in such a heavy quarter of second COVID wave, which comes down to less than 1,000 consults a day. So I'm just trying to understand the number. How many consults you're doing in a day?
So I just want to remind you that last quarter call was in June end. So, we had given you numbers more about numbers which were up to almost June end, So just so as to be on the same page. I'll allow Ms. Shobna to respond on how many consults we are doing now. But so it's not 70,000, it's much higher that we did in the quarter because we had the call around June end for the March, if you remember. So we had given you mostly around the numbers up to June end. Anyway, on the daily consults, Ms. Shobna can respond.
On the daily consults, where we range anywhere between 3,000 to 5,000 consults, which are paid. But during the COVID time, we were doing even 20,000. Some of them were free, or some of them were from corporate that had prepaid us.
Thanks, Shobna. Can you also mention about in July how many deliveries are happening, let's say, per month right now on the medicine delivery side?
I think that these results are for last quarter, for Q1.
Mm-hmm.
So when you attend the Q2, I'm sure we'd be happy to share.
But if you take June as a month, can you give a sense of June as a month?
So you're asking for what in June?
On the medicine delivery side, on the e-pharmacy side, how many orders are we delivering per month?
So we are doing close to about, like from in-store and from the designated hub stores. Altogether, we're at about 30,000 deliveries a day in June.
Thank you.
Thank you. The next question is from the line of Pratik Madhana from Nomura. Please go ahead.
Hello. Thank you for the opportunity, ma'am. My voice is clearly audible, right?
Yes, it's audible.
Okay. So one thing on continuing from Anubhav's question on the 24/7 revenue, you expect to end with USD 50 to 60 million of revenue, right? So from which divisions can we expect this revenue in 24/7? What can be the breakup?
It should be a combination of pharmacy, teleconsults, and diagnostics. This is what we have said, right? And bulk of that would be pharmacy because they capture the entire value there in 24/7, including the back end, which will be captured in Apollo HealthCo.
Okay. And on the medicine delivery bit, so how much of our revenues from pharmacy currently are from online deliveries? Like the total 1,500 crores, which is the back end revenue, or 1,800 crore, almost 1,800, which is the front end revenue. So how much is the online revenue?
Sanjeev, can you take that?
So I think as ma'am Manjay said that we are now building up the entire distance. So currently it should be in the range of about 5% of revenue coming in from the online side.
Okay, and then so what was this like last quarter?
You mean to say Q4 FY21?
Yes.
Yeah, so I think it was pretty less. It should be in the range of about 2 to 3%, and I think major traction has happened last quarter. So that is how the numbers are looking like at this
But we'd like you to put this in perspective. During this quarter, the Q1, we actually served from online and offline. We acquired 47 lakh new customers apart from the existing, and so there was quite a lot of pressure on the system. So these are the new customers that we've got with online and offline with zero customer acquisition cost.
Got it. Okay. And then just one last question on this bit. So what is our average revenue size from basically an offline purchase on a pharmacy and an online purchase? Average billing size, if you have that data.
The data is it actually is so different the way that we look at the cut. the lifetime value of over like the same customer transacting. If what we've seen is that if a customer is a regular customer in the pharmacy, he actually spends almost 25% more if he's online also. So the behavior patterns have changed, and that's why when you look at Omni, it's going to be a little different. They might spend an average bill value in pharmacy might be 400, but then when they transact between both together, it goes up to 1,200. For the chronic customers, it's even higher. So we're going to see a lot of varying. So looking at it, we're actually using technology to look at customers in a way more personalized view.
And you would also have seen that overall private label has also increased as at 13.83%. As an omni-channel, if you today look at our private label sales, which was 9%, now it's at 13.8%. You would have noticed that as part of our presentation.
Yes, sir. So my next question was that what is like the peak that we expect from the private labels? Like where do we expect it to stabilize around? Is 13% a normalized thing, or we expect it to come down or go further up in future?
So we have been.
It will keep slowly increasing. We understand what this is. We'll be introducing more categories, as you see. So it definitely won't go down. There was a surge for a lot of COVID-related items, but we're making sure that it doesn't come down, because we've introduced more categories which are more sustainable, including a few generic medicines and things like that. So we've understood this category. We have people behind it, and you'll see this continue to grow.
So, ma'am, just sorry, one last question on the generic medicines that you have introduced. Are you manufacturing that yourselves, or you're getting outsourced?
Never manufacture. No one in the world manufactures their own. We go to the best in class, and that's the difference. That our generic, we'll make sure that we get it from the best in class, and also keeps us agile, because we don't know manufacturing. We know the service industry better than anybody else.
Okay, thank you. Thank you very much. That's all from my side.
The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you so much. Just a couple of questions on COVID. So what was the total contribution from COVID-related hospitalization? And how do you see this unwind going forward? And second is, where have you captured vaccination linked volumes and revenues? Is it all in outpatient?
So yes, so overall the 25% of our revenues came from COVID. So that was almost, if you exclude Delhi, which is not part of the consolidated revenues, 490 crores was the revenues which came from COVID, including vaccines and RT-PCR. COVID vaccines is currently captured in outpatient.
No, and just adding to that, if you look at IP volumes, 26% of our IP volumes came from COVID. In terms of revenue, 26% of total revenue in healthcare services came from COVID, looking after COVID patients.
Thanks. And how do you see both of these in 2Q, 3Q, in the sense that would vaccines go up? And how about inpatient volumes and revenues?
Dr. Hari, vaccines?
Yeah, vaccines, I don't see it going up. There is definitely a fall in demand for vaccination across the country. We were doing a peak of almost 100,000 vaccines per day, but now it's come down to about 25 to 30,000 per day. And one of the reasons we're seeing that is because of the gap between the first and second dose of Covishield has been increased from 4 weeks to 12 weeks. So there's a longer time for that. We're seeing some amount of hesitancy in terms of vaccine. And third thing is people were very eager to get vaccinated when the COVID was at its peak. And as COVID came down, that eagerness also has come down. So there are multiple reasons for which the vaccine demand or requirement in the community has come down. But we are prepared to vaccinate as the demand requires. We have enough inventory in place, and we're vaccinating across more than 200 centers across the country, both in metros and semi-urban and semi-rural areas. So, but we don't see the same numbers happening in the second quarter as happened in the first quarter.
Okay, thanks.
Approximately 50% to 60% of the Q1 volumes will come in approximately, right, as we estimate now?
Right. As we estimate now.
But I'd like to add here 2 points. One is that Apollo has done almost 30% of all private vaccination in India, and for a urban based thing, we've also gone out into rural areas and done this, and we work with a lot of corporates to make this happen. And the second more important thing is, I think we have to understand that adult vaccination is here to stay. So in building up our cold chain and our capabilities, this will become an ongoing income for that will start getting accounted for.
And AK, as you said, it will be 40 to 50% that we expect in this quarter, because the second doses will come back somewhere towards the end of August and beginning of September.
Okay, great. Thanks. This is very helpful. And so the second question is regarding your core business, hospital services, where the current occupancy is, which is 67%. I think earlier you had peaked at 69 pre-COVID, and where the margins are, which are again pretty high, and we are not expanding volumes or capacity. So what's the outlook? What's the drivers for growth over next 1 to 2 years?
So clearly, it is better asset utilization. I think, like we said in this quarter, we are at 67% occupancy, out of which 26% is COVID occupancy. COVID occupancy comes with an ARPOB of 21,700 rupees, whereas our normal ARPOB is in excess of 44,000. So with that, if you look at mature hospitals, our margins are at 23%. New hospitals are at 16.4%. Keeping in mind, the ability to move this to 20% within this year is something that we are looking at. And the way we plan to do this is definitely focus on centers of excellence, where our ARPOBs are much higher. The ability to deliver on oncology, cardiac, orthopedic, neuro, and transplants, plus the emergency work. This will definitely increase our ARPOBs as well as our margins. The second is higher asset utilization. We have seen the ramp up of, our Tier 2 moving to 40% growth, and we believe that this is sustainable, because that once that COVID comes down, there will be pent-up demand to fill the beds. The third reason why we're optimistic about the future is that transport has started to open up. The airlines have opened up, and we believe that our patients will travel across geographies to come to our centers. Having said that, I think the decision to move into Tier 2 has clearly been a defining one that has resulted in a really good performance even during COVID.
Okay, great. Thanks. I've got more on 24/7. I'll come back in back. Thanks.
Thank you. We'll move on to the next question. That is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking our question. I'm just taking off on your last comment about the Tier 2 hospitals. I mean, these two hospitals took their own time to get started, and there were question marks around different hospitals, private hospitals expanding much in sort of opting for expansion in these towns. In your assessment, what has changed in the dynamics in tier 2, tier 3 town sort of business, which gives you more comfort on this now going forward?
So one thing is that tier 3 is really not in our radar. Tier 2, I mean, we did implement, we do have 2 hospitals in tier 3, and unfortunately, and both of them are contributing to EBITDA. But the most significant thing that we've realized is that people move to a category leader. So the fact that the Apollo brand is very strong, and it's strong because of the clinical outcomes. So we really managed to get very good doctors on board. And this, I think, is something that maybe we were a little bit slow to do, so it took a little time to ramp it up. But now that we have, all of the doctors in place, we believe that the occupancies will improve.
Okay. And secondly, with the transaction which is there in Apollo 24, Apollo Healthco, incremental fund infusion coming through in the parent, there is now a significant amount of financial capacity which is there, and the free cash flow business throwing up in the hospital business. So from a hospital business expansion thought process, how are you looking at over the next 2-3 years?
So, first of all, your line is not clear, but if I understood the question correctly, you want to know about the free cash flow post Apollo Healthco moving out.
How do we use
it? How do we use it? We are looking at expanding our presence and consolidating our presence in the north. There is one acquisition that we're looking at, and we will use our free cash flow, plus the fact that we've got 500 crores, close to 600 crores invested in mutual funds. So the company is adequately funded to make this acquisition. And we're also looking at something in the northeast, which again, I think, we are adequately funded to do that without having to add on more debt.
So even just to sort of complete that point, so this would be these acquisitions or these target markets now that we're looking at are largely what, tier 2 towns, tier 1 metros? Is there a
tier 1, and one which is tier 2.
Okay. And if we'll squeeze in a last one, on the pharmacy business, we've had a pretty large increase in the private label contribution in the current quarter. It hasn't quite reflected in the improvement in the EBITDA margin for the business. So how does it is there anything specific? Was some of this private label business doesn't contribute enough meaningfully to the margins at this point in time?
I think, we said in our opening remarks that while the margins have actually improved to 7.6%, there was 37 crores that was used for 24/7 for its customer acquisition and marketing costs. So, which is why, you are not seeing the margin improvement. But clearly, if you add back this amount to the 79 crores that we said, I think you will see that there is definitely an EBITDA margin improvement of at least 40 basis points.
Okay, thank you.
Thank you. The next question is on the line of Anubhav Agrawal from Credit Suisse. Please go ahead.
Yes, thank you. Just one clarity on the pharmacy business. I appreciate you just started a generic medicine business, but how large it is today? Like, is it like 1-2% of the business, 3-4% of the business? How large is it today?
Shobana?
We just started this. It's not significant enough for us to really. It's like in the region of 90 crores.
And how do you see this? At some point of time, will it become like 10% of the business, let's say, if it takes 3-4 years down the line?
It should. I think that this is our counter to this, rampant discounts that are actually not right. So I think that this is a much more intelligent way of customer play, is to be able to give them a better product at the right price.
And one more question on the pharmacy business. If we look at this total business, how much is the portion which is coming from non-medicines? For example, if the private label of 13.5% plus FMCG put together, how much is that? It is non-medicine revenue.
FMCG it was about 30%. So 30 plus this 13 is 43%.
Okay, sure. Thanks, Shobha. The second question is on the bed capacity. This quarter we added about 90 beds in Tamil Nadu and 76 in Karnataka. So this 90 beds which have they been added to the Green Hospital, or which hospital has been added? And same question for Karnataka as well.
We've operationalized new beds in our existing facilities.
Sunita ma'am, which facilities? Is there any large hospital like 60-70 beds has been added to one particular hospital? That's what I'm saying.
Vizag, Trichy, and also in New Bombay.
Okay. So 90 beds you have added in Tamil Nadu. That's basically.
That's Trichy.
Only in Trichy. And last question is on this AHLN, which is in the cradle and the daycare business. Our revenues are higher sequentially, but our EBITDA is significantly lower. So what led there? Because last 2 quarters we've taken out so much cost from the system. What happened in this quarter?
Chandrasekhar?
Yeah, I couldn't get that first part. Can you just repeat?
Yeah, on the cradle and the spectral business, revenues are okay in this quarter, which are higher compared to the March quarter, but the EBITDA has significantly gone down.
Because of, we have fixed doctor payouts. Which we could not completely do. And the EBITDA margins are a little lower. So if you're comparing it to Q4, Cradles had 3.6 crore, that is 36 million of EBITDA. And Q1FY22 is about 30. There's some year-end adjustments that benefited the Q4, but primarily it is static. On Spectra, we had a lower elective surgery. The numbers you are seeing is also including the vaccines. They were also doing oral vaccines. At AHLL, we did about 6 lakh. 80% of that number came from clinics. 20% was Spectras. So that revenue is what has benefited the Spectra overall number. But we have guaranteed payouts on fixed doctors, which is hence reduced the EBITDA bit.
But one doubt, Chandrasekhar, on this is that our revenues are higher sequentially. So even if we had a fixed payout doctor, that would not have changed so dramatically from the March quarter.
No, allow me to just lay that out.
Yes.
Our revenues minus vaccine actually in Spectra has gone down.
Okay.
That's the reason. 630 million down to 500. But it looks like similar because of the vaccine addition. The doctors that I'm talking about are fixed doctor payouts that will even out once we have resumption of elective surgery.
I think the perspective that you should take in this is that, AHLL is now focusing on diagnostics, and therefore the increase that has come from RT-PCR tests is part of our focus on diagnostics. So going forward, you will see a huge increase in the diagnostic business as well as in the clinics business.
Yes.
Just last clarity on that. On the diagnostic business, we have about 847 as part of our network right now, and we added about 200 odd centers in last 1 year. So in next 1 or 2 years, how do we see this 847 as a number? Do we see this like almost 2,000 as a number in next 2 to 3 years? I'm just trying to understand this.
Yes, you're talking about the collection center network?
Yes, correct.
That's right.
The whole diagnostic piece, Chandra, why don't you explain the whole diagnostic piece?
Yes. We are doing 2 things on the diagnostic piece. One is we are also ramping up our home collection capability. In the quarter 1 FY22, we added over 350 phlebos across 7 to 8 target cities. plus the collection center network we've added. We continue to add thereabouts of 200 to 300 per quarter is the run rate that we are hoping to do till we saturate markets per quarter.
That's a lot actually, because the last full year we added only 200.
Yeah, but we have this quarter we are adding further. We have pipeline of further addition. So we would reach in about a 2-year time frame, as you rightly said, upward of 2,000 collection centers.
Thank you, sir.
There will be a netting off. There will be some drop off. So that's why the addition to gross addition overall from the 847, we should be about 2,000 in the next less than 2 years.
Okay, thank you.
Thank you. The next question is on the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just a couple of them. So one is understanding on the the new capex requirement and the growth potential going forward. So what I understood was currently with the occupancy of 67, within that there is 26% COVID, and you still have a long runway to have the non-COVID patients still 67-70%. And so are there any plans for greenfield in the next couple of years? Or what do you think about greenfield expansion versus the 2 acquisitions that you spoke about in tier 1 and tier 2?
We're not really looking at greenfield at this point of time. We are looking at, like I said, strengthening our presence in the north. This will be through brownfield.
Okay, fair enough. And in terms of your margin journey, I mean, the new hospitals have picked up quite a bit. What I'm trying to understand is, you also mentioned, the ARPOB of non-COVID is 44 and COVID is 21,700.
Hello?
Yeah. Am I audible?
Prakash, your line is not visible. We can't hear you.
Am I audible now?
Hello?
Yes, we're able to hear you.
Moderator, can you hear us?
Yes, ma'am, we're able to hear you.
Everyone.
Can you hear me?
Yes, sir.
Very difficult to hear.
Yes,
hello?
Go ahead.
Am
Ma'am,
I
we're able to
audible?
hear you.
Call them, no?
I can hear the management.
Okay.
This is who?
Fine.
What was the question? Can someone repeat it?
Can the others hear?
Can the others hear?
Then I am going to repeat it.
Yeah, yes, please repeat.
Okay. So I'm trying to understand, the outlook on the margins. On the backdrop of, you mentioned ARPOB for non-COVID is 44 and non-COVID is 21,700, and we've already seen a good improvement in the new hospitals.
Yes.
So how do we see, with obviously non-COVID patients, share increasing, we would have an upward trend. So how do you see this panning out over 22, 23, 24 for your margins? I mean, some of the competitors are reporting 25, 29%. So I just wanted to know your journey in that, growth path.
So I think what is realizable is, you will see the mature hospitals moving into that territory of 24, 25. New hospitals will move up to about 20. So you'll see a blended margin of about 21% in the next 1 year. And this will come from higher asset utilization, focus on centers of excellence, which I think I spoke about earlier, where the ARPOBs are higher and the margins are higher, and also from cost cutting. So these 3 initiatives we believe will help us increase our margins.
So we have an asset utilization. If you look at us, we have added new hospitals. So potentially, as some of those assets keep getting mature and we take it to a much higher utilization, you will realize that we can also achieve higher margins. If you look at competitor margins, of course, I understand what you're saying. If you look at our most mature assets like Chennai, we all know that, we also are at 27% or 28%. It's just that, we have added capacity. There is headroom for growth. As some of that starts coming up, as Ms. Sunita said, we have seen a very good uptake in our tier 2 hospitals, in our new hospitals. All of this we believe will aid us well over the next couple of years, including Proton has started doing well.
Okay, got it. And lastly, on Apollo HealthCo, so you have talked about new pool of investor capital. So, any, rough, timelines, A, and B, in terms of, whether you are looking at strategic or financial partner here?
Shobana? Hello?
Shobana?
Yeah, hi. We are definitely, it's imperative that, one of the reasons for hiding this off also was to be able to chart a course that would create this competitive intensity to, to work in this environment. And at that stage, on one side, while we have strong partnerships with Airtel and HDFC Bank, and they're not financial partners. On the other, we're creating a pool of capital that will help us grow, and for that, in the next 60 days, we should come out with an announcement.
Mr. Agarwal, are you done with your questions?
No, I asked whether it would be more strategic or it would be more financial investor that you're looking at.
It will be a combination.
Okay, perfect. Great. Thank you and all the best.
Thank you.
Thank you. The next question is on the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you for the follow-up. And just talking of HealthCo, 24/7 platform,
Can you hear us?
I can hear you. Can you hear me?
Hello, Mayank?
Yeah, we can hear you.
Mayank?
Ma'am,
can you hear us?
Yes, Krishnan, I can hear you.
Yes, Krishnan, we can hear you. If you're not able
Okay,
to
the last question, we never had any question.
Operator, looks like management can't hear me, but I can hear them.
Okay, what is the question?
Yes.
We can hear you now.
Okay, great. So the question is for the HealthCo 24/7 platform, that your current doctors and the connect with the pharmacies is maybe under 1% of India's total. It just shows that, it's a very, very light, sort of underlying coverage that you have. So how will you fulfill the demand, and it's a digital platform, so at some point in time you will have hockey stick sort of, patients coming on board. And related to that is the competitive intensity. So one or two of large pharma companies have also launched their platform, and they have a natural connect with lakhs of doctors and pharmacies. So what's your thoughts on this? Thank you.
Shobana?
Yeah. So A is we believe that customers are discerning. For a pharma company to launch their app, one is that I think that just as we don't manufacture medicine because we don't understand that realm, and I think that the pharma companies do need companies like ours to be able to retail. So to become competitors, I do not understand their logic. I think that but many more pharma companies are now coming to us and asking us to align with them to be able to help in patient engagement. And those are interesting models that have existed in the West, and that can only be done through a technology-heavy platform like ours. And you'll see more of those partnerships. So I believe in those. The next question you asked is the capability or the ability to be able to ramp to India's demand. I can tell you that we have not been that the very fact that we went from doing 5,000 pharmacy deliveries to 30,000 pharmacy deliveries within 35 days clearly demonstrates the fact that we have the right supply chain. In these challenge times, people without supply chains are the ones that will really create a lot of customer disconnect. So Apollo has the strongest supply chain available in the market today. There's certain markets that we have a huge market share in the major cities of NCR, Bangalore, Hyderabad, Vizag, Chennai. But apart from that, we also have the capability to be able to deliver with our 4,500 stores. We continue to ramp up and open more than a store a day nowadays. And I think that this gives us the ability. If we do require, we have connections through our supply chain company with over 35,000 pharmacies. And this is available for us to use another light model to be able to do supply. So with regard to doctors, Apollo, 7,000 of Apollo doctors being available, we believe that it's important to offer people the right quality. And the other doctors, again, we're investing heavily into technology. We'll have the best clinical decision support system, which is currently being tested. Once we do that, you will find that the efficiency also will ramp up. So I believe that we have a lot of the answers. I don't claim that we have all the answers, but as we get better and bigger, we will solve for these in a sustainable way without, foregoing quality.
Just to add to what Shobana said, I think that 1% perspective is a very macro perspective. So what we do is to look at relevant market share. And if you look at the Tier 1 cities and the Tier 2 cities and the Tier 3 cities where they're present, I think this is what especially in Tier 1, where we've created the whole ecosystem of hospitals, clinics, delivery centers, etc. We look at relevant market share. And I believe that, that 24/7 and the pharmacy in particular, they had mapped out 10,000 PIN codes. But if you look at the first quarter, they've already moved that to 16,000. And like Shobana said, it's with the physical pharmacy format, plus the logistics chain, the supply chain that we have, I think we will be the strongest player. It's a strong combination of having an omni-channel presence.
Okay, great, thanks. And just finally, if I can, I know we are up on 1 hour. Smita, how do you think about the bed capacity?
Sorry, we are not able to hear you again.
Hello?
Operator?
Sorry to interrupt.
Can you try?
Hello?
Yeah.
Can you try? We are not able to hear you.
Krishnan, can you hear me now?
Yeah, now we can hear you.
Okay, I don't know. Okay, so Smita, how are you thinking about your bed capacity? And I say that because at 67-69% utilization occupancy, how much further can you go? And is this the time to press a panic button to say that now, look, we need to add 1,000-1,500 beds for the next 3 or 4 year journey ahead?
So, if you look at 67% occupancy, I think the first cut is that we've not operationalized all the beds. So we have 8,000 beds operationalized. We have the potential to operationalize another 2,000 beds by, at very little cost. The second part of it is that you must see us, that we will have a calibrated expansion plan in place, because this company we will continue to show growth. And to show growth and to strengthen our market share in certain cities, there will be some brownfield acquisitions that we will make, which will increase bed capacity. But having said that, the second cut that you should look at is a decrease in ALOS, which means, it gives us the potential to increase volumes. And this, we will actually show post-COVID, because during COVID, we had an ALOS of 7 against the normal 3.5.
Okay, great. Thank you so much. Very clear.
Thank you. The next question is from the line of Alok Dalal from CLSA India Private Limited. Please go ahead.
Yeah. Hi. Guys, can you hear me?
Yes, we can hear you.
Yeah. Krishnan, just one clarification. What was the contribution of RT-PCR tests for the diagnostic business for the quarter?
Chandra? Yeah, I'll answer that. In terms of volume, we did 6.6 lakh RT-PCR tests in the quarter, up from about 2 lakhs in the previous quarter. In terms of an absolute revenue contribution, we had a non-COVID of 60 crore and the COVID revenue was 45 crore.
Okay. And sir, last quarter you had given a guidance that diagnostics will be around 500 crore sales by FY23. Just to clarify, is this all organic or there will be a component of inorganic or acquisitions as well?
We have largely organic growth because we are market saturated and some more potential. There will
Can they hear you? Hello?
Yeah. Hello?
We seem to be losing
Sorry to interrupt, but we are losing the audio from the management line. I'll be disconnecting and reconnecting.
Yeah. Hello?
What?
Sorry to interrupt, we are losing the audio from the management line. I'll be disconnecting and reconnecting. Please stay connected. Thank you. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you.
Yeah, I was answering the question on the component of inorganic. The way we are looking at it is a large organic growth. We look at opportunistic inorganic acquisitions in markets where we are not as strong and newly entered markets that we are entering newly. But our primary focus will be on organic growth. There will be some component of inorganic, but that will be at obviously the right pricing and the right sizes that we will look at, and especially in the new markets.
Sure. Thank you. And one last question. Sunita ma'am, you had mentioned that you will look to bring down the pledge share component below 20% by March 21. Any fresh timelines on that?
I think COVID is delayed it, but like I said, by the end of the year, we hope to bring it down by 50%.
Okay, so pledge share will be down by 50% from current levels by end of the year.
Yes.
Okay.
It's currently at 24%. We've already brought it down, but it will come down further.
Sure. Thank you for taking my question.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital Advisors. Please go ahead.
Good afternoon. Thanks for the opportunity. My question is on the pharmacy distribution business. We've had a very strong quarter-on-quarter growth, and we've seen some of the growth in the front end as well. And then you mentioned some stocking and at the patients and some additional demand that you saw during the quarter. So going forward, how should we think of this current run rate of around 1,500 crores for the business? Will there be some softening as the stocking unwinds?
So 18 to 20% growth is what we have said. We have guided on that, and we will continue to maintain that growth. This is how you should look at it.
Understood. And Krishnan, one question on this back-end pharmacy that we are moving to Apollo HealthCo. So does this entity currently procure for our hospitals as well? And just trying to understand what happens to the procurement of drugs for the hospitals once this entity moves to Apollo HealthCo.
So it doesn't include the hospital procurement, which is part of healthcare services business completely, and this is just the procurement for the standalone pharmacy business. So the hospital business is integrated. Hospital procurement is integrated with healthcare services completely.
Understood. Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hello. Just a follow-up on the diagnostic business. Currently, the margins are on the lower side as you're looking to ramp up the growth. The peer set is around 25% EBITDA margins in this business. By when do we see ourselves getting into that sort of 20-25% bracket of margin range?
So I'll answer that, Krishnan.
Yes.
The current on a standalone diagnostics business, our margins currently are at 25, but aided by some bit of additional business from the COVID. On a steady state, the numbers are reaching there about the 20. So I'm expecting us to expand and go up to 25 in the next 12 months.
Okay, so the 500 crore, even despite the revenue targets, which are about 500 crores whereabouts revenues for next year, we should be able to maintain a 25% margins on that account.
Yeah, we are aiming to expand 25% as we reach that revenue objective without compromise. We're in a position to do about 20%, nearer to 20% now.
And Chandrasekhar, where do we go from there? At 500 crores, we still are going to be much smaller than a lot of the larger listed peers. From the business, that as you see the dynamics of the business, how big a business can really get to, say, over the next 3 to 5 years?
It definitely has a potential, and there is also a need. As you still say, while we look at the size of the overall market, I think the size of the unorganized is consistent, is pretty high. It's already 85% thereabouts. So I guess going ahead, the time for organized businesses to continue to ramp up and the space is available. So we have 2 spaces. One is also to start also looking at gaining on clinical leadership, which is what Apollo as a brand stands for. So we'll pursue that as an objective. In terms of a overall number, I think the headroom to grow to the size of four figures and above in terms of the 1,000 crore plus kind of revenues is an opportunity that we do have. I guess that organic growth is our first lever. Inorganic will be opportunistic. So we'll use these two to consistently look at growing.
And from a geography perspective, just when we get to say a 500 crore number, what proportion is going to be south dominated, or it's going to be a very evenly spread out mix for us from a revenue perspective?
We are going to be, we will have a mix in the 500 objective. We have a mix which is skewed higher on south and east. But I think we are making entry into the other markets in the west and the north. There will be some component, but there will be in their early days. So the percentage contribution from these new markets would be not more than 20% of the overall.
Right. And if I could squeeze in, Ms. Shobna, on the 24/7 platform, how important do you think is our ability to get partner doctors on board in terms of what role will they play going forward? And two, versus the other competing platforms, what incremental proposition do we offer to potential partner doctors?
As we've seen, the Apollo experience for partner doctors isn't just about 24/7. Even though we're able to bring them more customers in their community, like for instance, the vicinity of our pharmacies, it becomes easier for us to connect the doctor partners who are close by. And we've seen, especially during the pandemic, that's working well. But more than that, the reason that doctors would choose a premium platform like ours is the ability to hook into the Apollo ecosystem. Gives them higher access to CMEs, to learning, to second opinions, our superior CDSS that would help their technology and their clinical decisions. So it's a 360-degree package that we offer doctors.
Right, and in your assessment, how in this whole outpatient ecosystem that multiple players are looking to develop, the most critical piece is what, our ability to generate the online prescription, or if there are multiple pieces in that, but is there a fair assessment that our ability to generate the online prescription essentially is the core of this proposition? Getting online consult done.
Don't get me started on that. I think that getting a doctor on board to generate for a free consult to generate a prescription is actually unethical, and I don't think that's the way that it should be done. A doctor's service should be valued and should be paid for. So unless we get that straight in India, then all else. So I think Apollo stands for bringing the highest standard. We do not give away free consults to generate prescriptions. If we wanted to do that, we're not going to go down that road. So I decline from answering that.
Sure. Okay. Thank you, and best luck.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Ms. Sunita Reddy for a closing comment.
Ladies and gentlemen, thank you for joining us on this Saturday afternoon call. This has really been a defining quarter for all of us, but we were able to live up to our ESG commitments, where we demonstrated purpose as part by serving societies and our communities. And this has truly been Apollo's purpose, the ability to serve our patients and our communities. I believe we did so this time, and we did so by putting weight of our infrastructure, our doctors, our nurses, and our management towards looking after patients. And in the process, we looked after over 80,000 COVID patients. While we remain prepared for the third wave of COVID, we continue to be focused on innovation, on clinical efficiency, and the agility of our institution to serve larger communities and our consumers. Thank you again for joining this call and have a wonderful weekend. Stay safe, stay happy.
Thank you. Ladies and gentlemen, on behalf of Apollo Hospitals, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.